Good evening, everyone. Thanks for joining us for this session where we plan to discuss about the recent judgment of the Supreme Court under the Provident Fund Act. To start with, the large question as employers have is, does this judgment have any impact on employers? It's a big no. There's going to be no additional financial impact on employers, this judgment. So whatever has already been contributed, there's going to be no further contribution. This is more about pension and how employees' pension could be more, and how the Provident Fund organization would be liable to pay a higher pension to its members. So to start with, to whom will the judgment be of benefit? For those members who have been in the Provident Fund scheme prior to 1/9/2014 primarily, and those whose salary was in excess of the wage ceiling. So either rupees 6,500 before 1/9/14 or 15,000 thereafter. And those who have been contributing on their entire basic wages over and above the ceiling. So before September 14, the ceiling was 6,500, but let's assume your salary was 10,000 or 20,000 or 30,000. And on the entire amount, Provident Fund contribution was made by your employer, not your contribution, but if the employer had been making contribution over and above the ceiling limit, then there would be certain benefits flowing from this judgment. The basis of this judgment is the pension scheme. Section 6, capital A of the EPF Act empowered the central government to frame a scheme for pension. And accordingly, a scheme was also framed by the government way back in 95. In terms of this, what happens is your employer contributes 12% of your basic wages, and of the 12%, 8.33 so the goes to the pension, and 1.16 of this is contributed by the central government. This is how the scheme is. Just an illustration as to how it happens. So if somebody's basic salary was 40,000 rupees, the employer's contribution is 4,800, the employee's contribution is 4,800. Now we need to look only at the employer side. This is nothing to do with the employee side. The employee contribution goes to Provident Fund. Out of the employer contribution of 4,800, we can split it because the ceiling, let's assume, is 15,000 rupees. Then on that, only 1,800 actually the employer needs to contribute, which is on 15,000 rupees ceiling. 12% comes to 1,800. So that is called the mandatory contribution. But the employer over and above that also contributes, which is voluntary. So if you look at it, that is 3,000 rupees, or that is 12% on 25,000 rupees comes to that. So that's how the mandatory and voluntary contribution. By default, even if the employee doesn't do anything, this mandatory contribution of 1,800, of this 1,250 rupees goes to the pension scheme. This is already settled prior to September 14 or even today from 95 onwards. So if you're contributing over 15,000 or whatever it is, on the ceiling limit, so ceiling of 15,000, on the ceiling limit of 15,000, contribution would go to the pension scheme. So that is 1,250 rupees would have gone. The remaining amount goes to 550. So if you don't make any change, what happens then is, out of the voluntary contribution of 3,000 rupees, the entire 3,000 rupees goes towards pension, Provident Fund. There's no contribution to pension at all. So the entire amount goes to Provident Fund. And the pensionable salary, so for purposes of computing pension, the pensionable salary will be 15,000 rupees only. So on 15,000 rupees alone, you will get your pension. There is also a provision under the pension scheme to contribute more. How does it arise? That is what we are now looking at in this second screen. So if the employee can opt, saying, out of the voluntary contribution, also I want contribution to go to the pension. So the same example of 40,000, there are 4,800 goes towards employer, and in that mandatory contribution of 1,800, 1,250 is gone. Now what we are worried about is only the right hand side in the voluntary contribution towards pension. This 2,083 rupees can go towards the pension provided the employee gives an option. So employee should give a written option to the EPFO saying, I want, out of this voluntary contribution made by my employer, I want 8.33 of this also to go to pension. This is the first round of litigations which ended up in the judgment of R.C. Gupta. In R.C. Gupta, the Supreme Court said this option by the employee can be done at any point of time. The employer has paid 4,800 to PF. It is only a bifurcation of that amount. Of that 4,800, how much goes to pension, how much goes to PF is getting bifurcated. The entire amount was with the Provident Fund organization. Therefore, employee can opt saying, I want a larger portion to go to pension at any point of time. And there is no limitation for the employee to make this option. This is what R.T. Gupta said, and it also said that the employees who have already retired and taken the money, they can repay the money for a higher pension. And why do you need that? Because when you contribute on 40,000, on the higher contribution, your pensionable salary is reckoned as 40,000, and that based on that, pension is calculated. So this is the position that prevailed. pursuant to R.C. Gupta. Of course, R.C. Gupta came about much later. Going back slightly back, going back to 2014, the central government brought an amendment, one to the PF scheme. First to the PF scheme, where it increased the salary ceiling from 6,500 to 15,000. That was under the PF scheme. Next is under the pension scheme. Under the pension scheme, it brought about a few changes. First is, before the amendment, what they used to do is they used to take only the average of the last 12 months as pensionable salary, and based on that, pension used to be taken. But then they amended it to say, I will take the last 60 months average. So what happens when you go back by 60 months, the average comes down, so the pensionable salary comes down. So even if your pensionable salary, let's assume on the date of your retirement was 40,000, but 5 years back you would have got only 30,000. When you average it out, it could come to around 36, 37,000 would be your pensionable salary, even though at the time of retirement you would have got around 40,000 rupees as salary. It goes back to 60 months average, therefore your actual salary could come down. So that is one amendment that happened. Second is, of course, the ceiling of 6,500 was increased to 15,000. So the default, by default, the maximum pensionable salary increases to 15,000. So even if an employee doesn't opt to 15,000, it will be reckoned for pension automatically. The third is, they also said, if somebody joins the scheme new, and if their salary is going to be more than 15,000 even at the time of joining, that is a voluntary person voluntarily joining for PF scheme, such persons cannot become members of the pension scheme. And the last one is, which has two elements to it, is if your salary, as of 1914, let's assume your salary was 25,000. And even prior to the 1914, you were paying on 30,000 or 25,000 on the higher basic actual wages, you were paying contribution. Even such persons should give one more option within 6 months saying, I want to continue on a higher pension. And in such cases, they said the 1.16% that government normally contributes will not be contributed by the government. Government will contribute only up to 15,000 rupees and not beyond the 15,000 rupees. That will be taken up from the employee's PF. So these are the changes that came about. All these changes to the pension scheme were challenged before various high courts. High courts held in favor of employees, and the issue went to Supreme Court. As I already said, there was a judgment of R.C. Gupta, and the R.C. Gupta also, the EPFO wanted a review because it said that there is no time limit for switching over. So now when we go back, these are the issues that were there. So when you're taking 60 months preceding date of exit instead of 12 months, is it correct? This is one of the issues. Second, fixing 15,000 rather than the actual contribution, is that permissible? Third, one more option within 6 months. So I'm already contributing on a higher ceiling. Now directing me to give you one more option. Is it within 6 months I should opt once again? Is this right? Then the additional payment, additional contribution of members to the extent of 1.16%. Is this correct? And also the cutoff date to avail, basically go back to that 6 month period and things, because R.C. Gupta is already there. Now, as I said, high courts have already held that all these changes are bad in law for different reasons. Kerala High Court gave a reason of the economic aspects, saying today 15,000 is no big amount, and with such small pensions, people can't be there, and kind of went into the economic aspects more than the law. Rajasthan High Court had its own reasons. So all these landed up and batched up in the Supreme Court. So what is it that the Provident Fund organization argued was the option to contribute more than the salary limit. It's a voluntary basis. It is an option that the employees do. And in such cases, there is no vested legal right for the employees. And therefore, the amendments are all in order. And the salary fluctuations, what they argued is some employees on purpose, their salaries are increased in the last 12 months. And a higher contribution is paid on the last 12 months alone. And therefore, the pension that is payable becomes higher. And therefore, we have made it 60 months average and not 12 months average. And these are various arguments that were made. The Supreme Court has accepted most of the arguments. The first of the argument that was accepted was that this changes to the pension scheme, GSR 609, the main communication by which that was upheld as legal and valid. Second, however, GSR 609 sought to differentiate between exempted and non-exempted establishments. So under Section 17 of the Provident Fund Act, you can seek exemption. So they said exempted trust employees cannot ask for a higher pension, can only contribute on 15,000 to pension, not on their actual basic. That has been struck down. So they have said you cannot distinguish between an exempted and a regular establishment. Both are under the same pension scheme. That differentiation is bad. So even exempted employees can make an option for a higher pension. Then it was gone on to say those who have till date not given an option can given an option for a higher pension. So if you want to contribute or already you've been contributing, you want part of it to go to pension, you can beyond the ceiling limit, then within 4 months, such employee should give an option. Supreme Court has upheld the R.C. Gupta earlier judgment and has directed implementation of the judgment within 8 weeks. And it has struck down the law which mandated that 1.16% of the government contribution in excess of 15,000. That is, when you contribute over 15, up to 15,000, 8.33 goes to PF from the employer's share, and 1.16 government puts it into the pension equal amount. Above 15,000, they said 8.33 will be taken above 15,000 from the employer share, but the 1.16 will be taken from employee's contribution. Government will not go beyond 15,000. They have said that there is no such provision for under the Act, but they have said as this has been there for some time, they are going to allow this law to continue for 6 more months. Within 6 months, if Parliament in its wisdom amends and brings about the required legislative changes, well and good. If not, this 1.16 is bad in law and they would need to rework from 2014 onwards on this 1.16 that they have been claiming for pension. They said this increase from 12 months to 60 months average for pension, that is in order. So to that extent, they have said that's not bad in law. There are also a few contradictions in the judgment. We just try to point it out that the different places in the judgment. So in one part they say employees who have retired prior to 1/11/14 without exercising an option under para 11(3) would not get benefits extended in the judgment. Then they say those who have retired prior to 1/11/14 by exercising the option under para 11(3) shall be covered by the provisions as it stood prior to the amendment of 2014. And then they say members who do not exercise option under 11(3) would be entitled to exercise option under 11(4) within 4 months. And of course, there is also a very clear finding that they are upholding R.C. Gupta. So what is all this about? What are we looking at? As I already said, Are you an employee whose salary has been above the ceiling limit? That's the first question. If your salary is above the ceiling limit, and if your employer has contributed on that basic wages, so let's assume 25,000, 30,000, on the entire 25,000, 30,000 contribution has been made. You can even today exercise an option saying, I want a higher pension. So from my employer's contribution, entire 8.33 of the entire contribution amount should go to pension, and accordingly your pensionable salary will become higher. So that option has been given to all employees who are existing in members, whether you're 2014, prior to 2014 you should have been a member, then you have entitled to this benefit. Similarly, those after 2014 also can exercise this option. There is no time frame, but you should have become a member of the pension scheme because your salary should have been less than 15,000 at some point of time. Become a member, and today you can exercise the option if it is crossed 15,000. But there is one area where this judgment may be lacking. As I already said, R.C. Gupta judgment said this option saying that I want a higher pension can be exercised at any point of time. There is no time frame. That is what R.C. Gupta said. Supreme Court now says R.C. Gupta is correct law. It endorses the view made in R.C. Gupta and it says that is correct law. But it also says that those who have retired prior to 1/11/14 cannot now exercise for a higher pension. Whereas R.C. Gupta said you can exercise at any point of time. Having said R.C. Gupta is right law and that law is not wrong, this judgment now in para 44(5) says they cannot exercise. So that seems to be some contradiction in that aspect. So this is the crux of the judgment. What it has held is, so if somebody's basic wages in August 2014 was 18,000 and he was contributing on the entire wages, even though the ceiling was rupees 6,500, can this person now give an option for higher pension for contribution? Yes, this person can give a higher contribution. So this is what the crux of this judgment. If you have any questions, please feel free to post it in the chat box and we shall try to reply to you. There is a question on somebody asking me as to whether if I've joined after 1/4/2016, will I be eligible for pension? If your basic salary was less than 15,000, then you will be eligible for pension, not otherwise. Any other participant would like to ask any other further questions on this? You can maybe unmute yourself if possible and also shoot the question.
What happened to the corpus of the employee? You are on mute.
Hello?
Hello, sorry, I couldn't follow your question, Mr. Khanna.
No, what happened to the employee's corpus? So where that amount would be after employee's death, or how that the employee's fund would be, the pension fund would be, his amount, his contribution.
That those things are not going to change because of this judgment. There's no change either because of judgment or the amendment. So it's only a question of whether you are entitled to a higher pension. So the corpus and things are going to be the same. So there's not going to be change. It's only moving from pension to, from provident fund. Part of the contribution would be moved to the pension fund. That's it.
How this law will apply to the people who have changed the jobs in between and they have withdrawn their PF from the earlier employer?
It may not change much if they're still, because under the pension you need a minimum 10-year qualification. So if you're able to bring about a continuity because of your UAN or you give your provident, because your earlier pension, what you contributed will also still be with it, unless you've taken away the pension component as well. If it is less than 10 years, then there may be a challenge. But if you've done 10 years with your earlier employer and you settled your dues, and thereafter you again join with a fresh employer, maybe even with a break, then you will have the benefit.
Thank you.
Excuse me.
Yes, sir. This is Andrew.
Can I? Yeah, carry on.
Yeah, just wanted to check, sir. Somebody whose amount PF wage is much more than 15,000 even before 2014, processes they need to write to the PF department asking them to take that amount and put it in the pension fund. Is it? How does it work, sir?
Yes, an option needs to be exercised. You're right, Mr. Andrew. So somebody before 1914 was more than 6,500, so not even 15,000. If more than 6,500, but the question would be if more than 15,000 will only actually arise as on date. So more than 15,000, if their contribution is being made, and even prior to 14, it was more than the ceiling amount they had been making a contribution. Then today, the Supreme Court says there will be a joint option exercised by both the employer and employee, and the Provident Fund will do the needful for extending a higher pension to the employee.
Okay. So it has to be directly dealt with the PF department or through the employer.
Hello, sir.
Sorry?
Am I audible, sir?
Yes.
Hello.
Yes, sir. Sir,
Hello.
Sir,
Yeah, just Ranganathan wanted to check whose responsibility is to calculate the.
Sorry, Mr. Ranganathan, your question was who will. So now there could be cases, especially in case of exempted trust. There is when there is going to be a joint. That's why the Supreme Court said there will be a joint option exercised. And once the joint option is exercised, the exempted trust would need to ensure that appropriate amounts are transferred to the EPFO. So the additional contribution that needs to be done has to be transferred.
Good evening, everybody.
Yes,
I have a question. Now, I retired in June 2014. My employer had contributed on the actual salary beyond the 6,500. Now, I understand from whatever you have said that we are eligible to go ahead with the higher pension. Is my understanding correct?
June 2014, you retired, but no option was exercised.
Yes.
Prior to you were not.
Sorry? But the employer has paid on the actual salary.
And you retired in June 2014.
Correct.
And there was no option that was exercised prior to your retirement.
Yes.
There seems to be a conflict in there because Supreme Court has said such persons cannot now opt for a higher pension.
Okay.
So if you look at 44(5), they have said that those who have retired prior to 1st September 2014 without exercising any option under paragraph 11(3) of the pre-amendment scheme have already exited from the membership thereof.
Correct.
They would not be entitled to the benefit of the judgment. So they have restricted it there.
Okay.
But to be honest, this is a very specific finding. But if you also look at just one paragraph before that, this is what I read to you as paragraph 44(5) of the judgment.
Correct.
But if you look at paragraph 44(4), it shares the option can be exercised at any point of time.
Correct.
Therefore, there seems to be some conflict in that. So I think relying on RC Gupta, still an application can be made
Okay.
to the Provident Fund. It is wise. Maybe sometimes Supreme Court may review this and find out that there is a mistake or conflict between the findings in 44(4) and 44(5) and correct it. So for what it is worth, it may be you can make an option and just see what the judgment, what TPFO has to say.
Oh, I see. Okay. So, but somewhere when we started, you said that if the contribution has been made on the actual salary, then you're eligible. What is it? What is it? What does that refer to?
No, that's what in your case, it has been made on the actual salary above the ceiling. So you fulfill that criteria.
Yes.
But you also after, and you should continue to be on roll after 1st September 14.
Yes.
That is what it is. That's where the Supreme Court has drawn a distinction between those after 1914 and before 1914.
Okay. So what you're saying is I can now give an option to EPFO or through the employer and ask for higher pension.
You could try. That's all. Yeah.
Okay. Okay, fine.
Sir,
okay. Thank you so much.
My question is, sir, actually when in 2016, sir, they deducted PF, sir. My salary is 24,500 rupees, but they are deducted PF from 15,000 rupees. They are not given any salary split up, but they are just deducted from PF from 15,000 rupees. And now this is question number 1, sir. Number 2 is, where do I find in the 2016 my salary was less than 15,000 rupees, because there was no salary split up given to us. In that case, how to ascertain that, sir?
That is something you can go to the Adalat. PF Adalat will maybe give you the details. But anyway, your salary is less than 15,000. So this judgment is not going to affect you, sir. You will be getting the maximum pension.
Okay, thank you, sir. Thank you, sir.
Sir, following to the Rama madam's question, so if people attain the age of 58 after 1 September 2014, and they are not entitled with the higher pension, so the pension restricted with the 15,000 only. So if now the employee wants to go, they already retired and getting the pension now, like 2016, 17 or somewhere after 2014 they retired. Now if they want to entitle for the higher pension, so how the system going to work out, and what the role here employer to play to help the employees to get the higher pension?
No, sorry. Your question is retirement in 16, 17. Yes, then you need to just give an option. That's all. Both employer and employee. Okay. Mostly one of the option forms or something will come, or even otherwise a joint letter saying that I wish to exercise an option in terms of the judgment of the Supreme Court should be sufficient.
Okay. Okay. So so we have to wait the guidelines from EPF for how this is going to be.
Yes.
Okay. Sir, good evening. So for an employee whose wage is greater than 15,000 and joined after September 2014, as of now we can't join the EPS scheme. So is that will that stay the same, or is there any change?
Sorry. Therefore.
No. Is that remains
There's
the
no
same?
change in that, sir. There's no change. You will just continue to be under Provident Fund. So.
Okay. Thank you.
No, sir, good evening. I'm Parani from Kalishwari, which means if somebody retires after 58 and he continues to be in employment, he is still covered under PF, sir. That's what you're saying, sir?
No, that is immaterial. No, you don't need to cover a person after 58. That's not what I'm saying.
Okay.
After 58, you can always stop payment of contribution.
Even PF and EPS, both contribution?
Yes.
Okay. Oh. So there is no mandatory after 58 years. That's what you're saying?
Yes. If that's the age of retirement in your establishment, there is no requirement.
Okay.
Thank you. Yes,
right.
Good evening, sir.
Thank you, sir. Thank you, sir.
Good evening, sir.
Good evening.
Sir, my question is, sir, right now I am the member of PF Trust, and my salary and my PF deduction and pension deduction is made on this ceiling, that is 15,000. So, sir, can I opt for the option of higher pension?
No, sir, this judgment will have no application there.
But sir, in prior to joining this organization, my PF contribution was deducted on actual basis then.
Even then, sir, unless your current employer is doing, which will be the last, there will be no point in paying a higher unless the current employer is doing that. It will not be helping because it's only at the time of retirement. 5 years behind what is it you paid is what is going to be taken. So 5 years prior to your, I mean, immediately prior to your retirement date, if it is taken, it will only be 15,000.
Okay, sir. Thank you, sir. Thank you.
Sir, good evening. This is Meghanathan, sir, from BPCL. We are an exempted establishment, and we have a lot of retirees in people who retired after 2014. So they are approaching us, and what is that we'll have to wait for the communication from the HQ of the PF department, or we can initiate process now.
For 1914, was your question that?
Yeah, exactly. Those who retired after 1914.
No, 1914, they're all not entitled. After 1914, if there is somebody who is retired, then you can start exercising options.
Exactly, sir. I'm talking about the employees who have retired after 1914. So they wanted to know whether they can submit the option form now.
Yeah, you can start because the time limit of 4 months is there. Therefore, it is best to start it at the earliest.
Do we have to wait for the formal communication from the PF department, or we can initiate now?
No, you can initiate, I think, unless somebody initiates, they are not going to be looking into it. So I don't know if there is going to be a formal communication. So it is better that you start initiating.
Yeah, and sir, those who are active employees like me, then we can take option form from them as well, right?
Yes, certainly.
Then about the contribution, we'll have to start from the 95 onwards. We'll have to see their basic, because our salary was always on the higher side, more than the ceiling of the pensions ceiling. So whether we need to calculate from 95 onwards, and we'll have to transfer that money to PF pension account.
Yeah, you need to first give the option, and once the option is accepted, or otherwise also there will be a requirement for you to transfer the additional contribution amounts to the EPF.
Yeah, we'll have to calculate from 95 onwards, right? When the scheme was introduced.
Yes.
Good evening, sir. I'm Shyam. Sir, anyway, this pension calculation it depends on the last 60 months contribution, right? So
Correct.
Only last 60 months I can extend the maximum contribution, sir. Till that time, can I contribute only on 15,000?
That's what I can't answer that. And, yeah, that is one way of doing it. So if there is going to be a change in employer or something, and they decide to contribute, yes, they can. It's a possibility. I won't say it's. I don't think the act anywhere or the scheme, pension scheme anywhere, requires you to pay. There is one judgment, I think, where they've said you can't do that. So I don't know if that judgment will still hold good. But that is in fact the argument of the pension as well. So this is what you can do. And because they have said when you exceeded, you should have started paying, and that option. So, but sorry, sir, you can't do that. What happens now is you need to exercise this option within 4 months from today.
Okay.
From the date of judgment. So if you don't exercise it now, you can't now take it. So unless you are in, let's assume your retirement age is 60 and you're today 54 years old, then maybe you can exercise now and take it forward.
Okay, but see, sir, my salary anyway, it's keep on growing because I have some 20 years service from now. So I can increase now. There is no capping, right? To increase.
No, but if you've already crossed 15,000 today itself, and you're only restricting to 15,000 today, there's no question of you exercising an option at a later point of time.
Oh, okay, got it. Thank you. Very good answer.
Sir, one small, sir, pioneer one taken from this Kalishwari. Actually, sir, when we start new project and it is only a construction stage, And till this either this commercial production starts, do we need to cover ESI, PF?
So we'll take these things offline, Mr. Paini. We are today only on this judgment. So any question on the judgments alone.
Okay, fine.
While transferring this fund from the provident fund to pension, and the member has already taken some advances for construction of house and so, and doesn't have a sufficient amount. So will it be okay that he pays on from his own hand and then it can be transferred to pension like this?
Yeah, he may need to repay to the trust and then the trust will pay it. That would be the way forward.
So what if it's an unexempted establishment?
Unexempted, it's for the PF to, PF will ask the employee concerned to pay back the amount. They will compute and say how much is to be paid back.
Good evening, sir. Good evening. Am I audible, sir?
Yeah, sure. Please.
Yeah. Good evening, sir. I am Santosh Kumar from Mysore. I am from an exempted establishment. Sir, some of the employees who have joined during 2017 when this option was not there, because they were after 2014 they were not included in the PF. Whether in this particular judgment, whether they will be eligible to give an option for a higher pension?
Sorry, can you please repeat?
Somebody
joins in 2017.
Fresh employees. They were fresh employees. Previously they were not having this PF contribution also. So they are fresh employees. So they based on this judgment, they would like to exercise their option. Is it possible in this judgment?
No. Possible, provided they are members of the pension scheme. So if in 2017 they joined, let us assume on a basic salary of 20,000, which is beyond the ceiling, they would never be in a member of the pension scheme. So they can't get the benefit. But if they join, say, let's 2017, the salary was 14,000, and today it is crossed 15 for a period of time, then they can give an option.
No, they joined in 2017. Their salary was about exceeding 15,000. They were paying to the trust. We are exempted. They are paying to a trust, but no pension contribution was not. EPS contribution was not there.
No, that does not change. That doesn't change. They can't join the pension scheme.
They can't join them. Okay, sir. Thank you.
Sir, sir, that means those join after 14 and exempted employee drawing 15,000 and above, they will not be covered again on actual salary. Is it so, sir?
They will not be eligible for pension.
So they will not contribute to the pension, even actual salary, since they are initially exempted drawing higher salary.
They are not member of EPS, first of all.
Yes. Yes, sir, they can't.
Sir, like for the proof of payment prior to 2000.
Sorry, your line is breaking.
For the Form 3A or 12A, like we don't have the documents. Can you hear me, sir? So my question is like, if the employer like they ask the employee to submit the Form 3A and 12A prior to like 2012, like before ECR or online payment, and the employer doesn't have that original document which they submitted during that period, like will it be okay for them to submit the fresh calculation of the old whatever documents like 3A or 12A calculations?
I'm sorry, sir. On these procedural aspects, what PF is going to do is anybody's guess. I think they take a joint declaration. They want a declaration from the employer as well, and based on that, they proceed. That's how they've been doing all this. So I think they should continue this.
So, like last question, like they have given within 4 months to opt this option. So, provided like the PF also should give us the the clarity and the procedural.
So you make the option. Why are you waiting for anybody? First of all, employer and employee jointly should make an option. So you make the option within 4 months. Why should you wait for PF? They have not said anywhere the PF will come out with something, then you have to apply or anything. 4 months time is there, therefore for you to apply. That's all.
Yes, sir.
The judgment is talking about kind of additional contribution of 1.16 percentage by employees. What is your take on this, sir, and what is your advice?
No, the 1.16 is within the 24%. So 12% employer, 12% employee. current, what has been happening is employee share from that 1.16 is being taken and put into pension. That's what has been happening from 14 onwards. They have said that can continue till for another 6 months. And then it is for the they want to continue on this or not.
So there is no additional cost to the employee. This is what I understand.
No, there is no additional cost.
Okay, thank you.
So 1.16 is paid by the employer or employee, sir? I didn't get that, sir, please.
So there is no additional, first of all, there is only 12%.
Okay.
As of now, the 12% of employees straight away goes to PF.
Okay.
But because of this, in 2014 amendment, out of the 12%, 1.16 was in excess of 15,000. So whatever the amount in excess of 15,000, in that 1.16 goes from the employee's contribution of 12% to pension.
Okay. So it will be 8.33 plus 1.16, sir. Is it like that?
Over and above 15,000.
Exactly. Okay, sir. Thank you, sir.
Thank you, everyone. Thanks for joining. I think with this, we'll close. Please feel free to write to us if you have any queries. Thank you.
PPT, sir, if you can share, because I just lost some of the slides in the beginning.
Thank you, sir.
Thank you very much, sir.
இதுவா
Thank you, sir.
ஹோம் ஸ்டே ஆமாமா ஹோம் ஸ்டே நம்பர் வாங்கி